Hello, everybody. It's Cheree. I am your favorite lender, and this is Simply Funded. Simply Funded does hard money loans for real estate investors throughout the Metro DC area. We also serve self employed borrowers who are buying homes for themselves, as well as just, W 2 regular homeowners as well, people who are looking for down payment assistance programs, all sorts of people that we serve on the Simply Funded platform. But our core audience is, of course, always investors and self employed individuals. And today's topic is all about loans for short term rentals. So, the first thing I want to do is invite you to call or text me at 703 951 4419. I want to actually put it on the screen here as we are going to then have this conversation. So, again, call or text 703 951 4419. Okay, short term rentals. Let's just talk a little bit for a second about what short term rentals are and why they're so popular. We're also going to talk about some of the issues that have come about with regards to short term rentals, and we're going to also talk about the funding for short term rentals. So, first of all, a short term rental is any place that you rent for less than 30 days. So, most of you know Airbnb, there's Vacasa, there's VRBO, there are all sorts of other platforms that will post your property as a short term rental. We also have seen the emergence of midterm rentals now. Midterm rentals are anywhere from 30 days to about 9 months, is what we typically see for a midterm rental. Midterm rentals typically are for student housing, for example, or travel nurses, or we live in the Metro DC area. If you have somebody who is coming for 6 months in order to do some government work at the Department of Defense or something like that, they may choose to get into a midterm rental. And then, of course, long term rentals are for people who are leasing your property for 12 months or more. Well, the interesting thing about short term rentals is that they, of course, grown in popularity over the past, what is it, decade now, probably. And there are various lenders who will or will not loan with regards to a short term rental. And it's more so when they recognize the income of your short term rental property. So, what do I mean by that? If you have already purchased the property and we are looking at a short term rental for you, you already own it, you've owned it for more than a year, and you're able to give us that transaction history for a year. So that we're able to tell the rental income based on the 12 months of transactions, then yes, we're able to use your previous history in order to refinance your property, you know, and give you a cash out, for example. But let's say you want to buy a short-term rental. A lot of lenders will not recognize the short-term rental estimated income, which is usually higher than a long-term rental, right? Most lenders will not recognize um, the short-term rental income if you are purchasing the property. What most lenders will do is they will, for your typical investment product, your DSCR or debt service coverage ratio product, they will look at the long-term rental income. And for every dollar that you are spending in principal, interest, taxes, insurance, and any HOA fees, you need to have a dollar of long-term potential rental income for that property. And you may say, well, Cheree, I don't get a one-to-one ratio unless I do a short-term rental, right? And oh, sorry, the question you may ask before then is, well, the one-to-one works, whether it's a long-term rental or a short-term rental, can I still get a loan? And my answer is yes. You can still get the loan, even if you intend to use it for a short-term rental. That's perfectly fine. But let's say the numbers don't work. Let's say you only get a one-to-one ratio or greater if you are applying for this as a short term rental. what can you do? A couple of things you could do. Number one is you can get just a traditional conventional loan if you have enough income coming in from your business, from your W 2, from your other rental properties, in order to be able to show that second mortgage from that investment property. Um, as long as your debt to income ratio makes sense and you have enough income to support it. But let's say you don't. Or let's say you want to do a limited documentation loan and you don't really want to go there. I know I spent 5 minutes getting to the good part. The good part is now I have a lender that actually loans on short-term rentals, and they will use the AirDNA rentalizer. They will use the AirDNA rentalizer in order to give you that loan. So you do have to, for this specific lender, have a 700 or greater credit score. That's number one. Number two, if you have run short-term rentals before, meaning you have another property and this is your second, third, fourth, or fifth one, the down payments can be as little as 25%. But if this is your very first short-term rental, your down payments are going to start at 30% down. So if you're going to play in the short-term rental arena, you are going to have some down payment money in order to do that. Other than that, that is it. Again, call, text 703-951-4419 if you want to talk about any lending scenarios or situations that you have. Thanks so much, and I will see you tomorrow with another loan program of the day.